All right. Okay. We are at variation number 7 when it comes to the double bottom type of setup. Okay. This one is going to be just like the ranging one. The only difference between the two, um, my bad. The difference between the two, which was the last one we went under, we went over where the market was consolidating and ranging, right? This one's going to be more of a wedge, right? Probably wondering what do I mean by that. I got you. So we have market falling, right? Boom. All right, it just stops and then it goes up, right? It goes up. Like so, right? Boom. But this time around, when the market came back down, it hit a zone, right? But it started creating a wedge. If you pay attention to it, right? Each low is within the same low point, but each high is lower than the previous one, right? So it's wedging at a angle. So when we draw a zone, right, from the original turnaround point, because that's what we're waiting for, the anticipation, right? That's where the market bounced off. If you pay attention to it, right, you will notice that the market again was wedging. It did hit the zone, but it was wedging it. It's like it created like a wedge, like a slice of pie. Okay. So that's just the difference between the last one that we went over, where instead of wedging, it literally consolidate, um, bouncing up and down like in a range motion, right? Where the highs and the low is about the same height. But with this one, it wedged at an angle. Okay. A lot of time, the confluence for this one with the RSI will be divergent. But again, that's for another lesson. But that again, that right there is variation number 7. So let's get rid of this real quick. Okay. So that's variation number 7. So just like before, you should notice that every single setup it has the same characteristic with just a little bit different flavor, a little bit of different flair to it, right? Where one is a bit lower, the second bottom is a bit lower, or the second one is a bit higher, right? Or you hit it twice, or wick to the bottom, or it could give you another double hit, kind of like right here, say hit boom, boom. That could have been right there to go up, but instead it continued to wedge down, right? And then to eventually go up, like so, right? And then to eventually go up. So it didn't matter if you had your price action within the first hit or the second hit. The key is you take it for what it is within the zone and then you leave it alone because it's still within zone. Remember, market didn't break. So again, that's just a different variation of the double bottom setup itself. All right. I'm going to show you how it may present itself as somewhat like the wedge it will be ranging, or my bad, it will be consolidating with the candle. But with the line chart, you will see that it's a wedge. Okay. All right. So let me pull this up real quick. We could do the one with the price action first. That way you get a much better understanding of how it would look like. Okay, right here. All right. Now you see that? So market came to a zone, right? Hit the zone, but it just sat, right? It sat there 4 hour, 4 hour, 4 hour, 4 hour, right? We got a whole 8 and the whole 16 hours of the market just sitting there for whatever reason it is. All right. And again, just like before, all setup is based off higher time frame, month, week, and day. So your technical analysis has to be based off either the monthly, the weekly, or the daily time frame, regardless if you are choosing to take the trade off the daily, which I am pro of. Freedom. All right. But with this right here, it's just consolidating, meaning just sitting there. But when you switch it from the candles into the line chart, a lot of time it will look like it's wedging. Because if you pay attention, right, you never got a bullish engulfing until the very, very last one. But the bullish candle was lower, right? And the bearish candle never engulfed the previous one. So it will be a perfect example of how the market will be either ranging on a lower time frame or consolidating, right? Or just wedging, right? So I say this to say sometimes you get double bottom where it will sit there for extra 4, right? Extra 4 hour, extra 8 hours. But again, it doesn't mean that your setup is not valid. I just want to make that very, very, very clear. But yeah, so again, this is variation number 7. Okay. When it comes to the DB, or also known as double bottom. Okay. And please go ahead and do this illustration on your composition notebook or your sketchbook, whichever one that you choose to do. Again, if you do both, I would definitely greatly appreciate that, right? Because you put in the extra effort in, and then these will help you out because the market will give you these type of setup, and having that information will help you out a lot, right? See here, double bottom, right? Boom, boom, came down a bit more to come after the break, of course. Break, retest, continue up. But if you see that, right, it stayed within the zone, right? The lows didn't get any lower, but the highs was getting lower. It was just wedging, and then to go back up, right? And then to go up. All right. It's literally just like the previous one. So this is a variation of a double bottom where the second bottom did hit our zone, but instead of continue buying up, market just continue to wedge down. All right. Continue to sell, but it's not giving you new lower low that's lower than the previous low, but instead we get equal lows, but the high, to be more specific, the lower highs are getting lower and lower. Okay, let me put that in there for you just in case, just so you can have that information itself. Let me make that lower like this. Boom. Right, these will be your lower highs, right? Why they are lower highs? Because even though they're high, they are getting lower and lower, right? You see that? And then these right here would be considered as your lower lows, right? Because each low is getting lower than the previous low. Okay. Where these lows are the same. It never dropped any lower than the previous low. Okay. So again, this is variation number 7. I know it's repetitive, but after a while, it's just gonna sink in. All right. And I'm looking forward to seeing you guys in the homework. Again, you do this, put your own flair to it, give me all the information that you know, and give me all the information that I need to know about the setup itself. Okay. I need to know, hey, look, man, this is this. Okay. This setup is always going to be based off the higher time frame. What time frame are those? Month, week, daily. Um, I'm using the 4-hour time frame, which is the lowest time frame I will use to execute, pull the trigger to buy, and I will be waiting for a bullish engulfing to buy the market. Okay, and I know my bullish engulfing would be available to me. Right, right. It will be available to me between 1, 5, or 9. Okay. Very simple. All right. And don't worry about missing out on any information. Right. Give me everything that you got, and I'll add to it. All right. Give me $100 and I'll add 200 to it.